Well, it's a very good morning from him, and of course, it's a very good morning from me. Hope everybody's well. Let's head into the studio and give you the usual greeting and a hello and how are you and all those good things. Hell of a storm last night, wasn't it? I don't know if you were. I'm sure you were, but you may not be from the UK. But we had this massive storm, 60, 70, 80-mile-an-hour winds coming down the track, which was pretty horrendous stuff, really, wasn't it? But hope you're all well and you managed to survive and you've got to work or not got to work, depending if you're working from home. So, welcome to my Mortgage live stream. We've got a few ideas to help you with your mortgage career and your financial services ambitions, maybe over the next few years or so. So, that sort of 15, 20 minutes or so of information to help you in your business. So, hope all is good with you. Hope your first sort of 3 weeks in January has been according to your goals. That's, of course, if you set goals, which I'm sure you did. If not, then you should do so as well. So I hope all is progressing well in your business. Lots of things going on in the news now, of course. Now, I spent my Christmas present last week, which was fabulous. I was given a trial flight in a little Cessna plane. I'll share with you what it looked like. It's a picture of me in the Cessna plane, or outside the Cessna plane anyway. For those of you on the podcast, it's a tiny little plane, two-seater thing. And I was taken up there by a flight person, of course, a trained pilot, and she took me up there and I actually flew the plane. There's another picture of me flying the plane for about 25 minutes up in the sky, up, down, left, right, banking and all that kind of stuff. It was great fun. And I had a feeling about it, because here's a picture of up in the plane. This is about sort of 1,000 feet or so. And here's another picture of the plane with all the dials. This is about 2,000 feet as well. And here's another picture of the Cessna dials. Again, this is not me. This is like on an island. Now, the point I'm making here with these pictures is that these are sims. These are flight sims. I think it's the Microsoft Flight Simulator. And that was the point I had up there in the sky, because I kind of thought, as I was like bombing along at 95 miles an hour, all I could see was like sort of the horizon and a few sort of features and things. And we were going up and down, banking left and right. And it was costing a lot of money. We were burning fuel, it was time, it was costs, etc. And it's a bit like training, really, because I could have done that in a flight simulator and it would have been the same, because you're only going up, down, bank left and right. It's no big deal. I wasn't landing or taking off. That's hard. I can't do that. And that's my point about training and development. If you're doing training in your business and you're relying upon the real world to train people, not only is it expensive, people make mistakes, but do training in a classroom with role play. It's like a flight simulator, isn't it? It's cheaper, quicker, and just as good, actually. That was the lesson I had from my flight sim, but I thoroughly enjoyed it. Will I take it up as a flying hobby? No, because it's very expensive. It costs thousands of pounds to learn to fly, let alone to rent a plane or charter a plane when you actually decide you want to do that. So maybe that's something in the future. In the meantime, of course, we've had the news over the weekend of the Treasury. As you know, the budget's coming up on March the 6th, which is kind of like the spring budget. It's the Conservatives parties or government's chance to reduce some taxes, make people feel good, and get ready for the general election, which is I reckon, going to be in November. But wait and see on that one. And it will. So wait and see on that one. But what they've introduced is this new idea called the 99% mortgage. No details yet, but what's going to happen is that the Treasury, that's the place of all the money, of course, they're going to underwrite to help lenders to lend 99% mortgages, which with a 1% deposit. Now, everyone's got their opinion, and rightly so. It will heat up the market, etc., etc. Of course, it will. But it's designed to help first-time buyers, and it will. When I was a mortgage advisor in the 1980s and 1990s, I know that was 2 decades ago, but we did a ton of 100% mortgages and 96, 97% mortgages. Lenders were very happy to lend on that because they took out mortgage indemnity guarantee insurance, which was paid for by the borrower, and it protected the lender. Now, the government will probably just do the same. They won't I don't think they'll lend money to the people. They'll just underwrite the mortgages for the lenders to give them the appetite to lend. So it means that first-time buyers who don't have deposit, and by the way, back in the 1980s, 1990s, first-time buyers didn't have deposits either. They didn't suddenly have a load of money. but they could borrow 99%, 98%, 95% mortgages fairly easily at good multiples of income. And therefore, they got their foot onto the housing ladder and then stepped upwards. I think it's a good thing. I generally believe that. It might heat up the market. I think the market needs something to get things going. And of course, the government want the housing market to pick up during the summer. Everybody then feels good, don't they? Because the market of buying and selling houses gets busy. And then all the ancillary businesses like furniture companies and carpet fitters and the builders who focus on consumers, they all get busy and everyone feeling good about themselves. And that's exactly what I think they'll do. So I think it's a good thing. I don't know what your thoughts are. Please post it below in the comments in the YouTube box as well. Yeah, good stuff. Good stuff. What else has been happening? Now, you may have read about the FCA and car loans. That's another one that's come into the news recently that you might be asked about, or you might be at a dinner party at the weekend, and therefore somebody will ask you about it. And what's happened in the past, and they reckon this is the next big claiming thing, is that people who sold car loans, which of course are now regulated, somebody would come in to buy a car and various leasing or PCP or whatever it was. And if there was finance involved, which is usually arranged by the dealership with the motor manufacturer, if there's finance involved, the dealership earned a commission. Nothing wrong with that, because you do as well on life assurance and stuff like that as well. Nothing wrong with that at all. But what happened apparently was that you had commission available on a car loan was comparable with the interest rate that the car loan paid, which makes sense actually. The higher the interest rate, the higher the commission. So what was happening apparently is that these car dealers were selling the higher interest rate loan deals because they were getting higher commission. You can't make this stuff up, can you? Anyway, they're allowing complaints to come through now, and of course the vultures of the claims management companies will swoop down shortly, pick it all up, and we'll all be going back over the last 10 years to have a look at our car loan agreements, won't we? See if we've got the paperwork, to see if we were flogged a high interest rate car loan, and we can claim thousands of pounds back. But that's the next big FCA scam thing that's going to go on. Anyway, enough of the updates for you. What I want to do now is give you some ideas to help you in your mortgage business. Now, a lot of mortgage advisors now, mortgage and protection advisors, of course, are getting involved in protection advice now with their MOTs and product transfers. And rightfully so, you should too. So I'm going to take you through a few ideas to help you along the way. So let's head over to my slides for this one. So I'm going to pop into the green screen. Now, here's a picture of the green screen, by the way, if you're ever interested in this. That's the green screen that I've got there. What I do is I put my slides over the green screen, and then what I do is I then pop on in and say hello. So if anyone wants to know how to do this, I can share with you. It's not that difficult. But it means that you can use slides and you can talk to the camera and present as well along the way. Now, I want to give you a couple of ideas to take you to the end of my live stream this morning to help you sell more protection. The first one is number one, called context before critical illness. Now, as you know, with a protection package, you're looking at critical illness, income protection, and life assurance, and all the bolt-ons, etc., that go with it. So it's kind of like a package you're looking at. And good mortgage and protection advisors, they will look at all the needs that the client has, both life and health. Now, critical illness, I've talked to thousands of mortgage and financial protection advisors, is a very difficult thing to advise to clients. A lot of advisors have their own mental awareness about this, their own bias. I get all of that. But the point is that when you're discussing critical illness with a client, so a few thoughts for you. When you're discussing critical illness with a client, maybe clients actually don't know what it actually means. So you should ask them questions. Do you know what critical illness is? Let me explain it first. So let's just whiz back for that one for you so you can see that. Now, clients don't know about critical illness. It's a technical term. They maybe don't know about it. So when discussing critical illness, ask if they know anybody else who suffered from a heart attack or cancer or something like that. And then you coach the gap. And that's the point, you see, with the first technique for you. So two things to do here. First of all, if they don't know anybody, if you're discussing critical illness, maybe they don't understand it. That's the point I'm making here. Maybe they don't get it. If so, ask them if they know about it. If not, explain it to them first before you start triggering them. Then when you discuss it, ask if they know anybody else that's had a heart attack or cancer, and then you can start coaching the gap for it as well. So I think that's a really good technique to help you along the way. Now, the second idea to help you with mortgage and protection advising is to get your value proposition right up at the front end. Now, we often call it the value proposition. Sometimes we call it the elevator pitch. It's the introduction right at the beginning in the 15-minute mortgage discovery meeting, or whatever meeting you have right at the beginning, when you're talking about the client's goals, how you work, your authorization status, of course, your fee schedules. You're talking about how things work and operate. And before you start charging a fee, this is like a complimentary introductory call just to see if there's chemistry between you and the client, and you can proceed on that basis. Find out what their goal is, what they're trying to achieve, what they're trying to look for, a little bit more about them, their motivation. You want to be qualifying them as well. So there's lots to do at the front end. And the important one is what we call the value proposition. Now, to give a value proposition, it's not a regulatory introduction, the FCA thing and all that. So it's not that. You'll incorporate that in, of course you will. But this is a chance for you to explain how you work and how you operate and what you're about. And before you start crafting a value proposition, I'll give you a demonstration of one in a second. Have a think about two things. First of all, what value do you actually provide the client? What is your value? What do you do for your customers? And when I ask this question to brokers, they give me all sorts of answers. Of course they do. It tends to be like, get the best deal. And I'm fed up with this phrase, deal, actually. We're using it too much. It sounds like car salesman. I'll get you the best deal. What deal have you got at the moment? I don't like it. It needs to come out of our language anyway. It's the value that we provide that matters most. And when I did some brainstorming with some brokers recently, these are the kind of values that we all have. Lots and lots of different values. We guide them along the process, sort the right loan for them, deal all the paperwork, handle all the people, explain everything. We operate on video, we hold your hands, we ensure you're fully protected, we help you budget, and we use time-saving tech. That's just like 10 pieces of value that we provide people. Now, once you get that value comfortable in your head, now you can start crafting a value proposition, because all you're doing really is you're telling them what value you provide. But the value you provide does really come down to the clients that you talk to. And hopefully you've niched your marketplace. In other words, you're working with clients that you found a little niche that suits you. So you understand the client's needs, wants, and pains. And that's the next question to ask yourself. What are your clients' pains? In other words, when they come and talk to you, why are they talking to you? What's worrying them? What they need solving? And again, we've done some research on this as well. And we've asked brokers to tell us what their clients' pains are. And here's a few. Unusual income. They don't know where to start. They're wary of the people. They feel pressurized. They can't access lenders. They've got no time for lengthy interviews. They have no time for paperwork. They're worried about getting a bad deal. Yeah, I've used that phrase, haven't I? They're worried about the costs involved. So lots of pains clients have when they come to talk to you. And I like the ones like they're wary of the people in the process. They don't trust some of the people. They don't want lengthy interviews anymore. They can't actually access the lenders they want. They've got an unusual income. That's not, or they've got an unusual credit history, a coffee stain or something. They're worried about the costs. So there's lots of pains. So if you put that together, then you can create a value proposition. So at the end of this podcast or live stream, whatever you're listening to, I hope that you start thinking about your value proposition and maybe look at it in a slightly different way. So let me give you examples of how you might want to craft this. Because there's 4 parts to a value proposition. Number 1 is you and your role. Who are you and what's your role? Number 2 is what do you do? What's your business? What do you do? Number 3, how you help your clients. Remember, it's all about pains versus value, isn't it? And then the next steps for the meeting that you're involved in. So that's an example for you. So let me just give you a few words, how I introduce myself as a mortgage and protection advisor. And I would start off by saying, my name is Paul Archer. I'm Paul Archer. I'm an authorized mortgage and protection advisor. And keep it at that. Now, what do I do? Well, I help people like yourselves to finance the property that they're looking to buy or to refinance. I'm really good at helping people obtain the right finance. And what I have the ability to do is go into the market and look at every lender and get the right loan that suits your needs and wants. Now, I got software that does that, and it's really high powered, and I'm able to get people the right finance for their loans. At the same time, I take care of everything. I deal with all the paperwork and all the people involved. But what I also like to do is to make sure that not only do you get the right finance, but you're fully protected against anything nature throws at you. Because I want you to own your house for the next 20, 25 years, or however long your mortgage term is. Now, during that period of time, nature will throw all sorts of things at you: fire, flood. We had loads of floods recently, death of you guys, illness. These things happen. And I want to make sure that if those natural things occur, then you're fully protected. So you get to live in that house forever and look after those lovely kids that you've done. Now, I've done that for hundreds, thousands of customers. My firm has been operating for 10, 15 years, and I'm really proud of the value that we provide people. And together, you and I can do that too. Now, let me explain to you then how I'm authorized to do this, because you have to have lots of authorization from the watchdogs, and then how I earn a living, and then we can move on to the next stage. So that's my example. So let me explain how I'm qualified and authorized to do this. Is like your Velcro to go into your FCA stuff, and your whole of market operations, that sort of thing. Whoever you're directly authorized through as well. But I kept the FCA stuff to the end of my value proposition. Of course, once you've talked about that, then of course you want to talk about them. Now let's talk a bit more about you guys and what your aims and goals are and operations. And once you know what they're looking for and whether there's chemistry and whether you can do business together, it's then that you'll introduce your fee. In other words, how you earn a living. And then you'll introduce your fee, and then you'll get agreement, and then you'll move on to the next stage in which you then start charging. So that's value proposition. It's not actually that complex, really, is it? At the end of the day, it's very, very interesting. And it brings value. So a couple of ideas to help you. Notice where I introduce the mortgage and protection side together. They're not separate. They are one. And your job is to help them find the finance to buy the house or remortgage or whatever, and then get them to stay in that place for years. That's your role, and you're very good at it too. So don't make it any surprises. Hope you enjoyed that. Bye. All right, let's pop back into the real world rather than the green screen world as well. Got some more ideas for you next week as well. I'm on my travels next week, so my podcast or my live stream will probably come from a different place next week. So we'll see how that pans out, shall we, as well. So we'll be here again next week at the same time for you as well. And all I can do now is to wish you, obviously, a great week. Remember, of course, to QR code me if you want to get onto our database, or there is a link just below the show notes here, if that's the right phrase to use. And other than that, I hope you have a fantastic week. Enjoy the weather, if that's the right thing to use. I'll see you all again next week. Bye for now. Bye.